Hello, guys. During my career as a trader, I always find it too difficult um, to teach people some basic trading skills. The problem is the traders, especially beginners, they do the same mistakes over and over and over and over. And then they complain why they are losing money. That is the puzzle that I will speak today. So I will give you an example just to make sure you understand earning news. Understand that when you buy a stock as a short-term trader, or what we call swing trading, you are following the trend for many days, many weeks, many months. It depends on the trend, okay? No one knows. So while you are following, and let's say you are making money. So the first thing, before even you buy a stock, the first thing you should see is when is the earning news will happen. Okay? Just today, or just yesterday, someone sent me an email. They say, okay, I got trapped into earning news. I lost more money than I expected. So what should I do? Okay. This is the thing I'm always speaking about. Is when you get a loss, understand this is a good thing for you. And you say to me, oh, Kareem, why you say that? We are telling you that we lost money and you are laughing and you say it's good for you. No, it's not good for us. No, it is good for you. Because the market just punishes you one time. If you take the lesson with a big heart and you understand that it is your fault, and then next time don't stay in earning news. Is this simple? Yes, it is simple. Why you should lose 10% to 20% in a big gap down because of the earning news? Why you do that? Okay? I understand some people think it might be having a gap up and you lose a lot of money, lots of profits. Yes. But try to think about yourself. Don't think about something that will happen and will never happen. Two things will happen in earning news. I say two things, two major things, sometimes three major things. Sometimes the stock, you see some stocks, they don't respond to the news. Either the company makes money or they don't make money. You find the stock is the same, doesn't change that much. Why? It is just because day traders, either they don't know this stock very well, or it has a big coverage by analysts. Okay? You understand that some stocks, we don't have only one analyst that speak about. For example, let's say Facebook. Facebook, you should know that there are a lot of analysts are specialized only in Facebook. They are paid to follow Facebook in everything they do. Okay? And to compare it with other social media stocks. So they know a lot. And since there is a big coverage, a lot of day traders, they listen very, very well what these analysts are saying. And when the news comes, it will be the big deal. Either sometimes it is a good news and they buy heavily. You can check that, because some people, they have never seen it, but it's very simple. If it is after the market close, you just go to your broker after the market close, check the price, and follow the price until it will change. Now, when it will change very, very quick. In 1 second or 2, 3, the stock can go from 20 to 30, or from 20 to 15, or to 12. This is the first guys who, when they hear the news, they just buy heavily. Sometimes they are right, sometimes they are wrong. It depends. That's why sometimes you find bad news and you find the stock is going up. Sometimes it is good news and you find that the stock is going down. It's just the first impression the big traders have, they do it. Understand that in trading, because of the news, thousands and thousands of people, they come and they are waiting like you are waiting. Okay? So these are for day traders. Now, since we are, let's say, short-term traders, so a lot of people, they are not interested to see what's going on until we have the gap up or gap down. Now, so either good news or bad news, and sometimes some stocks, they don't respond. As I told you, there is no coverage, there is no analysis, and you find these stocks, let's say, with short volume, so no traders know about these stocks. That's why you find some stocks that they go so wild in this earning news. Now, when you are following a stock into a trend, especially we are going to an uptrend, you begin to make money or you just bought it, understand that looking at the earning news, it is your job. It is not the market who send you an email and say, okay, today is the earning news of this stock that you own, please exit or do whatever. No, it's your job. Some brokers, they will show you alerts. Okay? They show you alerts when there is earning news. And this is very good. Okay? And this is a good service. You don't have to pay for it, because mostly it's for free. But it comes with the stock itself. Now, the thing I'm saying is that when you lose money, you should understand that this is a lesson for you. It's not something bad. It is something good. Because whenever you have this lesson, you should remember it for the next stocks that you are going to buy. Okay? And you should never regret losing money or making money. Never regret it, because it is a trade that you did. You should forget it, but you don't forget the lesson. This is the thing. Okay? So stock, you should not love the stock or hate the stock. The stock is just a means to make money. Okay? So if you know how to trade, you can make money. But if you continue doing the same mistakes and you say, oh, I'm hoping for gap up this time, because last time we have gap down, this time maybe we have gap. So here what you are doing, you are just gambling. So instead of gambling, you should make sure that you understand that you might have a gap down, that you lose a large percentage of your money. I'm telling you the truth. Some people think that sometimes it is only 5% or 10%. No, I'm telling you, I have seen stocks that go down like 90%. It means if you put $10,000, $9,000 is lost. Okay? And all these problems, you can avoid these problems by not being there. Okay? Or another solution, you put a very small positions always, not big positions. Or you can sell a lot of shares and leave just little or few shares. If you want to just to see if there is a gap up, maybe you make money, it's good. But if you leave all the shares and you hold them into the earnings, you are going to have a big deal. It could be good, you can make some money, but it could be too bad and you lose a lot of money. Understand that the market, when they took your money, it's over. You lose 10%, 20%, 30%, it's your problem. Don't say, oh, these guys Wall Street, why they sell short. I find someone arguing with me, say, oh, today the news are good, earnings are good. Why the stock goes down? Why we have a gap up? I say, I don't know. Try to call the short sellers, call them and ask them to give you a reason why they do that. Understand that this is just a game. That's why the people, they don't believe it is just a game. Now, I'm telling you why it is a game. Okay? Does the company lose money in the earnings? No. Most of the companies, almost all of them, are making money. But you find the company has a gap down. You mean the stock. But the company itself, does it lose money? No, they are making money. Because having a gap up or gap down has nothing related to profits of the company. It has a relation with what the analyst says, or with the analysts say, and with the company EPS. It means earning per share. What they say. That's it. It's just a big event in a small news. The stock can go up or go down. So this is just a game. It has nothing to do with the company. I'm telling you always the same thing for many years, but the people, they don't understand. They think, oh, it's a gap down, this company is losing money. No, the company has never lost money. They make money, but this EPS is less what the analysts have been saying into their consensus. That's why short sellers, they come and they sell short the stock. They're not going to take profits from the company and they get them. No. Because the profits, who get the profits? Is the executives of the company, is the workers. If you have 401k, you get some profits. It is the executives, they get big bonuses if they have made a lot of money. So this has nothing to do with the stock market. Stock market is another game. It's another world that you should live in the game. To understand it, you should be in the limits of the stock market. Don't go to the company itself. The company itself is making money and they are happy. That's why when there is a gap up or gap down, do you think that the executives will be very happy or very sad? Who cares? If an executive has millions of bonus, who cares about the stock itself? If it's go up or gap down or gap up, they're not going to make money from that. They are going to make money from the company, what it gives them. And since they are executives, they do the meeting and they prescribe how much money they should take from the company. This is the real, what we call the real earning that I always speak. But most of the people they always confused between the company and the stock. So In short of this video is just understand that gap up or gap down, whatever happens to the market, it's your responsibility to do an action. If you stay and you have a gap down, it is your mistake 100%. It's not the market mistake, it's yours. Because you stayed and there is probability of losing money. Now, if there is a gap up, it's your responsibility also, and you make money because of your choice. Okay? So if you are new to trading and you don't want to have trouble with this earning news, so before you buy the stock, check the earning news calendar and see when we have the earning news. You can also check the history of this company if it has a lot of gap up and gap down. This is very easy. You just check any chart and you will see. If you want to stay out of the trouble of losing a lot of money, guys, just sell your shares and wait. If there is a gap down, you are happy. You don't lose anything. If there is a gap up, it's okay. Maybe the stock will continue to go up and you buy it again and then you make money. So this is how easy it is to trade stocks. But a lot of people, they get confused, and if you don't take the lesson, if you don't learn the lesson and apply it next time, you will be doing the same mistake. If you do the same mistake, you will lose always, and at the end of the year, you are a loser. This is as simple as that. If you learn the mistake, next time there is a gap down, maybe another stock, you are out of it. Okay? You don't lose. You don't make money, yes, but you don't lose, which is the most important thing in trading, is not to lose that much. Because earning news, sometimes it takes a big chunk of your money that you are not okay with that amount of money. For example, you expect 2% or 3% loss, and then you get 15% loss or 20% loss. So you don't expect that. And this is the problem when you don't act on time. Okay? So thank you very much, and see you tomorrow. Tomorrow is Friday, as you might know. I always have my live at 10 p.m. Eastern Time on YouTube. So please be there, have your questions, have your stocks, and we can make a very good live session. As always, thank you very much, and see you tomorrow.